is Ivan, and I just came up with some very important information that I'd like to share. So basically, I come upon this information when I'm researching should I buy Nvidia for the Q3 earning. So like all of you, I look at all the analyst report and I look at all the data, and this is what I found. For the last 8 earning, the Nvidia go up after its earning report, but only one time, which is last August. It go down initially, but go back up afterward. So I asked myself, why is this happening? Why is this the case? And a lot of people say that it's because relative to a year ago, the growth is declining. So when you look at a year back, it's about 400 to 500% growth, but now it's 150% growth. So they're saying the growth is slowing down, and this is why it went down. But if it's like that, it should maintain, doesn't go down. And this doesn't make sense at all, because when you compare to another year ago, all right, so you can see that because at that time the price is relatively low, so there is a strong growth, which is a 400%. But after this 400% growth, the company is already big, so another growth of that magnitude would not be sensible. But if you look at the number itself, it's still going up. The earning, all of them is still going up. So it shouldn't be the case. And if it's really the case, it should go down, then stay there. So I asked myself, maybe it's not the retail problem, maybe it's something else. So I look at what other things is changing during those days, and I come up with this. Japanese yen ran down by a significant bit during that drop. So now I ask myself, then why does yen have the effect of Nvidia? So if you tell me that Taiwan have an effect on Nvidia, I would say it makes sense, because you know that most of the Nvidia chips is mixed by TSMC. But then why is it Japan? Does Japan secretly make Nvidia chips now? Is there something that I don't know of? So I went in and do some more research, and I found that it's not just Nvidia. And you can see that the stock market already start dropping at August 5th. So at that day, what happened is the yuan plummeted by over 10%, and the stock of S&P 500 ran down by another 10%. I did a cost correlation to test this relationship, and I find out that it's over 0.8. That means that it's 80% correlated. Just in case you don't know what cost correlation is, it's used to test the similarity of two signals, and it can match pattern and tell you something that whether they are correlated or not. So I asked myself, would that be happening again? Why is yuan moving? And I looked into it and found that at June 31st, the yuan interest rate went increased from 0.1% to 0.25%, and as a result, it plummeted. But that day, August 4, sounds very familiar. And isn't it the day that Warren Buffett sell half of his Apple share? If you look at his timing, it's just impeccable. Can you see that he sell everything? He sell his stock right before it dropped. So how does he know? How can he sell all his stock way before the stock plummeted? But maybe there is a causality effect between yen and the S&P 500. You can see that the yuan go down first, then the stock market go down. So what is causing this? How come yuan have such an effect on the US market? So I did some more research and I find out this. So because yuan have a very low interest rate, now a lot of trader would go and sell yuan and buy US dollar. So by doing this, they multiply their capital by 6 times. If they're selling 5 times of the amount of yuan, they got 6 times amount of their stock, money to buy stock. So this is why when yuan suddenly change, it actually triggers something called a margins call. So margins call is when your assets is not enough to pay back your borrowed money, and you have to be forced to sell what you have to repay the money. So look at the scenario I showed just now. If yuan raised by 10%, US stock drop by 10%, it already triggered a margin call. So 1 million, you are owning 5 million, right? But if yuan raised by 10%, it becomes 5.5 million. But in the same time, your stock 6 million, because US stock dropped by 10%, it becomes 5.4 million. And as you can see between these two numbers, you already don't have enough money to pay back what you owe. So this is why you triggered a margin call and you will lose all your money. And would history repeat itself? I think it's probably going to be, because the next interest review of US is in December 17 to 18, and for Japan is in December 18 or 19. So if either one of them change the interest rate, it's going to affect this new chain of leveraging. So would the interest rate change? I think it's very likely, because US have an slight increase in the unemployment rate, and the inflation isn't going up that badly. Well, it's difficult to talk about inflations because a lot of things could affect us. There will be Ukraine war. You know that the Ukraine war caused the oil price to just went up, and Trump is allowing all the fracking. The oil price may go back down. So this video is not talking about whether interest rate should adjust or not, but I think it could be very likely that either one side of them is going to change the interest rate, because Japan have a really bad inflation right now, and US employment rate isn't as good. So on both sides, US may want to lower the interest rate, and Japan may want to increase the interest rate. So either one of them changes would trigger what happened before. But why is this a game changer? Why is Warren Buffett holding all the cash? It is a game changer because if you compare the old method of leveraging, so the old method of leveraging, what you would get is, well, you just borrow US dollar. But before, the US interest rate is low, you may be paying 2% of interest rate. But now the interest rate is high, you're not doing that. But actually there's a good side of the old way of leveraging, because if you're doing a 3 times margin, you would need the US stock to drop by 25% for your portfolio to drop to 3 million, triggering the margins call. It's actually more difficult to trigger a margins call. But now with the new way of leveraging, the one that involves selling yuan and getting US dollar, if we are following the same leverage ratio, which is 3 times, you only need the US stock to drop by 50% and the yuan to raise by 50% to trigger a margins call. And I did a little bit of math. This is the new method, this is the old method. You can see that if you have 10 times of leverage, you need 10%, but now you only need 5%, and overall it's much easier for anyone to trigger a margins call because of this new leveraging method. On top of that, now there's a race of AI, and AI is start to be used on trading. Anyone with a good knowledge of AI can get data from all the trading platform and analyze them to make sure that they will always earn money by shorting a stock or causing a disruption in the leverage chain. Well, just in case you're saying that no, it's not possible for them to sell you that, for those platforms to sell you those information, think about Facebook. So there's a very interesting documentary called The Social Dilemma. In that, they say one thing, which is, if you're not paying for the product, you are the product. So Facebook let you use them freely because they can gather your data and they can target advertisement on you. Think about those trading platforms. I even see one advertisement saying that one of them now can help you pay zero tax, and they have such a no charge. Most of them is essentially no charge. They give you very easy option to do leverage with very low interest charge. So essentially you're not paying for the product. Why is that? Perhaps the same thing is because you are the product. They gather all your information and using AI to analyze them. So just a quick recap. What I know now is, first, it's very easy to trigger a margins call. It's easier to trigger a margins call. Before you need 25% of stock to drop. Now it's just a 15%. And interest rate adjustment is imminent. So I don't know what would exactly happen here. Maybe nothing will occur, but this interest rate is just not going to last. If it's not this December, it would be next quarter. And there's now AI powered training. So this AI is going to give those brick broker an unfair advantages, just like the war that's happening right now. Ukraine is using all the AI technology, Palantir, to hit Russia where they hurt. This AI is going to give the broker the power to hit the trader where it hurts. So I think all of this caused Warren Buffett to worry, and he is thinking about he need to do something. Well, just in case you discredited me for saying that, think about what Warren Buffett did after the financial tsunami in 2008. He donated 1.6 billion after the financial crisis to help all the people. Well, last time he didn't see that coming. Maybe it's too little too late for him. So he ended up just able to donate a bit of money to help the people in need. But this time, I think he sees this coming. And this is why he is building a financial nuclear deterrent by holding cash. So what I think he is doing is, he is trying to be Captain America. He have his 325 billion plus of cash as a money shield. If anyone try to squeeze the market and trigger a financial crisis, those cash is going to catch them when they are vulnerable. If they try to short, Warren Buffett cash is going to come in and buy the stock, raising the price up, and then by doing that, they stop them from earning any money, and this is the ultimate financial deterrent of him against all the evil broker who try to steal our money. Thank you for listening. I'm Ivan, and this is my sharing.